Yes, ma'am.
Yes, better go ahead and start.
Okay, ma'am. Good morning and warm welcome to dear participants in webinar organized by Department of Management BBD ITM Lucknow in association with Institution of Innovation Council IIC on the topic India post-pandemic impact on MSMEs and startups. Before proceeding this session, I would like to welcome our honorable patrons. First of all, I would like to welcome our Honorable Chief Patron, Dr. Alka Das Gupta Ma'am, Chairperson BBDEG, Mr. Viras Sagar Das Ji Sir, President BBDEG, our respected Director, Professor Dr. S.S. Chauhan Sir, BBD ITM, our respected HOD, Professor Dr. Manish Singh Sir, Department of Management, BBD ITM. Now, I would like to welcome our honorable guest speaker, Mr. Jatin Srivastav, sir. I would also like to welcome our honorable guest speaker, Mr. Viraj Sagar Das Ji, sir, President, BBD ITM. Now, I would like to invite our honorable guest speaker, Mr. Jatin Srivastav, sir. I would also like to invite our honorable guest speaker, Mr. Viras Sagar Das Ji, sir.
Welcome and extend my gratitude to all the dignitaries, faculty members, participants, students of our institutes and other reputed institutes who are showing their active participation. And on the same note, I owe my warm and special welcome to our eminent resource person, CA Jatin Shrivastava sir. Sir, I am extremely delighted to host a session for you. And when I joined the institute, sir was our HOD. Me and some other faculties had a very good time to work under your sheer guidance. Today, after 10 years, again we had an opportunity to hear your insightful words on the most sought topic, that is MSMEs and startups in the post pandemic. In this distressful environment, when most of the newspapers and magazines are publishing that world or India is experiencing some type of slowdown in the economy, and many of these startups and MSMEs are about to lay off or shut down. So we really need some hopeful words, some good words who can give us, who can inspire us. There is still a way for startup and MSMEs. So on the same note, we have invited the sir, and now I would like to invite Professor Vinay Kumar Yadav sir to say a few words about the eminent speaker. Over to you, sir.
Thank you. Thank you, Preeti ma'am. It is my pleasure to welcome CA Jatin Srivastava sir. Sir was part of BBD family from 2011 to 13 as head in the Department of Management, BBD ITM. Sir was instrumental in bringing new initiatives that benefited the students and faculty members alike. I request Jatin sir to enlighten our students and participants with his knowledge and views. And I am sure all of us will go more knowledgeable today after this session. And it's a happy moment for us to meet you, sir, in virtual mode. Heartiest welcome, sir.
Thank you so much, everyone, for having me.
Thank you, sir.
Thank you so much, sir and ma'am. Now, I would like to invite our respected HOD, Dr. Manish Singh, sir. Sir, over to you.
I'm giving the thanks to Dr. Preeti and Mr. Vinay just arranged such wonderful event. And I would like to give my deepest thanks to the chairperson, Dr. Alka Dasji, and our president of the BBD group, Mr. Viraj Sagar Dasji. And I'm also expressing the deepest gratitude to our director, sir, of BBD ITM, Dr. Professor S.S. Chauhan, sir. And I would like to ask thanks to our today's eminent speaker Mr. Jatin Srivastava, sir, they have given are going to provide us precious time for delivering his ideas, and that will be helpful to our students for understanding the structure of the micro, small, and medium enterprises, and especially the impact on the post-pandemic in Indian perspective. And also, I would like to thank the all faculty members and students being here for their presence for today's event. And am I audible to all?
Yes, sir. You
Yes,
are
sir.
perfectly audible.
Okay, so prior just going to say, I want to share one of my experience because this it is a very wonderful, the event. I am very happy to be here, and already I have done a lots of work respect of the micro and the small enterprises. When I was in Brazil and Argentina, and also I was in Kabul, I'm going to share the experience with respect of the Kabul. When I was there, so the problem was to the micro institutions, especially respect to the farmers, and the farmers had a very poor state in the country like the Afghanistan, and I had just prepared one policy for the, and it was just going to be recommended by the to the Ministry of Agriculture, and I have just started a project with the association with the World Bank for microfinancing to the farmers, and I just took the participation of the nationalized bank of the like the Bank Emily Afghan and the Pasani Bank were leading bank of the government banks of the country, and just due to hard work of the management of the Bank Emily Afghan and the World Bank and the Ministry of Finance and the Ministry of Agriculture, the project was become successful, and the farmers were getting these some small finances for their agriculture inputs. So that was just really a good achievement. So
I think he is muted. Manish ji, आप mute हैं. Manish ji, please unmute.
yeah, hello.
Yes, we can hear you.
Hello. Yeah, now I'm audible.
Yes, sir. Yes, sir. You are audible.
Some network problem is there.
Audible, sir.
So, okay. Just now we have to listen to the. Just now we have to listen to the. Sir?
Sure.
Thank you, sir. Before inviting our guest speaker, I give you all a brief intro about him. Mr. Jatin Srivastava, sir, is a seasoned
Hello.
professional. Hello.
Hello. Now.
Yes, sir.
Hello. Yes.
Yes, sir.
Okay. No problem.
Okay,
Just
sir.
there was a problem was there. We were interrupted due to the network problem was there. Okay. No problem. Okay, now we have to just listen to the ideas of Mr. Jatin Srivastava, sir, respect of the micro, small, and medium scale enterprises, respect to the post-pandemic effect in respect of India. Thank you, sir.
Thank you so much, sir. Mr. Jatin Srivastava, sir, is a seasoned professional possessing more than 18 years of rich and diverse experience of serving as economic advisor or virtual CEO to various funded startups, MSMEs, corporate entities, and government PSU across India. He is co-founder and partner of State and Associates, a re-owned chartered accountancy and business advisory firm in India, and many more. Not taking so much time, I would like to invite our respected guest speaker, Mr. Jatin Srivastava, sir. Sir, over to you.
Yeah. Thank you so much for the kind invitation and the introduction here. Really humbled by the gestures of all faculty and the HOD involved. And it's always it's a special moment for the simple reason that I've been part of the same family earlier. So it makes me feel more nostalgic when I'm addressing the students at BBD. Hopefully, I try to do justice to the topic and I bring some experience which we have on ground with the the economic engagement that we have as a firm, as an organization. We engage with almost every section of the economy, which helps us give a clearer picture in terms of how it is shaping up, how things are actually moving, and in which direction we can expect it to go. So let me share my presentation. It will help deliberate on the topic. Yeah, hopefully it is visible. So economic recovery, implications from SMEs and startups. So economic recovery itself has its own connotations, both at the macro level and the macro level. And we all have seen the impact of experience, not only seen, but also experienced the impact of pandemic on the Indian economy. So taking that context, I'll try to break certain myths and also try to bring certain perspectives which are hitherto not usually discussed. And at the end of the session, if I am able to make you guys feel a little positive about the whole economic condition, then my purpose is well served. Let's see if that happens or not. What are the usual thoughts whenever we look at the Indian economy? The usual thoughts are retail, travel, hospitality is shut. Nothing is happening. A lot of retail owners, entrepreneurs are cribbing about it. There's no sale in the market. There's no demand side. Travel is already stuck, but whenever people get, you would have seen things changing. That is a skeptical outlook towards the Indian economy. And liquidity crunch, that the rotation of capital, rotation of money is something which is troubling the whole ecosystem. These are usual thoughts. We'll start with the usual thoughts and try and build upon unusual thoughts. And I'll bring certain facts, data, and information to make up the case for it. The idea here is to help you understand how to view an economy and how to actually evaluate its implications as and when it is what's happening on the GDP is 9.5%. Expecting to be between 9.5 to 10%. Now, considering what has happened across the world, and you are presented by the data which is presented here, what do you think? India is better than the economy, global economy, or it is expected to be 9.5, 23.9, 8.5? The recent new data released by World Economic Forum is also being shared as 9.5 for 2023, and 2024 is expected to be 10.5. The whole world is to breach 6% benchmark of growth. The US is again in a difficult shape, but they are trying to come out with the 8%. China, US, and India are which have been set for most of the other economies. So by GDP numbers, comparatively, we are doing when it comes to global benchmark, India will be the fastest growing economy in the next few years to come. And trust me, people living in Lucknow, there's a lot to cheer upon how things are shaping up in UP as well. I'll touch a little more upon the UP economy, which will give you a perspective of how these states are shaping up. Now look at the world in 2030, GDP wise. China is expected to grow from 23.2 trillion to 64.2 trillion. Almost it will become the largest economy. India will become is expected to be a 46.3 trillion economy and from 9.5 trillion. So this is a data which is basically benchmark on certain parameters, and they are trying to reflect upon how the whole system is going. This data has been fetched from one of the economic reports. So this is how India is going. US may not be able to grow as fast as India and China. Indonesia is going well. Turkey is going well, but India will be among the top 2 economic growth engines for the world. Now, with this whole mechanism, it is somewhere we are talking about purchasing power parity. So this is something we need to understand. When we are looking at trillion and value wise, we're not looking at absolute values, we're looking at relative values. And relative value comes from PPP, purchasing power parity economic parameters. So it is 2030 at the basis of PPP, India will be a 46.3 trillion economy, and which will make it the second largest economy in the world. It will surpass US on PPP terms. Please be advised, it is PPP, not an absolute data. Let's look at another economic indicator, foreign reserves. Now, forex reserves, it's an indicator which reflects how we are trading in the global economy and do we have sufficient resources to trade further in the global economy. So international trade and the funds needed to do international trade is reflected through forex reserve. In 1991, when the economy was going through a difficult time, at that time we were only having a forex reserve of 50 days to pay off our, giving a perspective in a common parlance. If you have certain money in your pocket and you know you have to pay bills, and you have money only to pay your bills for 15 days, imagine the kind of situation you are into. From 1991 post-liberalization era, we have seen tremendous change and we are sitting at 2021, 30 years from there. And today, India is doing fairly very well in terms of the forex reserve. Let's look at the data here. Already out, so it is always reserve. Forex reserve is a very, very important indicator, and economics faculty will be able to help you understand more on this. But forex reserve is a very important indicator for global presence and global leadership in the economic sense. So there we are in a very sweet spot, and we are well placed to manage our imports, manage our exports, and pay our bills. Let's look at the third indicator, which is GST. GST is an indicator which reflects buying and selling of goods and services. It's a goods and services tax. As GST collection increases, it impacts or indicates that the economy is recovering well. Let's see some data points to see how GST has been collected over the periods of past 1 year or so. The left side data will give you, the left side chart will give you some information about how the 3 months of first lockdown and the 3 months of second lockdown fared on the GST front. In 2021, it was a tapered lockdown, not an absolute lockdown. That's why you see in April, it has a far deeper collection point in 1,41,000 crores in terms of monthly GST. May and June had a dip because of the impact in May, because of the second lockdown, and the impact in June. Now look at the data on the right side of the table. You will see the charts have recovered from January 2020. The dip is there in April, May of 2020, and gradually it is recovering, and it was able to beat the 120 benchmark, test the 120 benchmark somewhere in this year itself. But again, the second lockdown in May and June, again the second dip happened. The second dip made people a lot more skeptical because they have seen loss of lives, they have seen loss of stocks, they have seen loss of on every single front, and that skepticism has also become pervasive. And today, whenever we talk from the negative perspective first, and then we come to the positive side. Now, first I build up the dip side. Now look at where we stand today in the past 4 months. The left side data will give you a data point of how September 2020, we were 95,000 in collection, and which were able to rise to 141 in April. Then second lockdown happened in May and June, and then the second dip is there. But if you look at the past 3 months, which is July, August, and September, consistently we are above 110,000 of GST collections. So there has been ripples in the economy. If you look at the right side data, it reflects a dip. So this chart is reflecting 2 dips, one in April 2020 and one in April, May and June of 2021. However, it is a recovery that matters. The real data which matters is now, the past 3 months after the second lockdown has already been over. This is encouraging in nature, positive in the direction, and if we go by the same momentum, we expect to breach the top GST collection in any financial year in the current financial year, that is 21-22. It is expected to be the best GST year in terms of collection. Another indicator which gives you a perspective of micro data point. GST is a reflection of microeconomics more so than the macro, because it reflects the demand and supply of goods and services which are bought and purchased in the same economy. And GST in most of the exports is negligible because we want to promote exports. It doesn't reflect much upon the international economics or international transactions. So the very geography that we are part of as a country, this data reflects economic activities there. Let's look at the economic indicator of FDI. FDI is a kind of capital that goes for long-term investments. FDI as an indicator reflects that there is promise in the economy, international money is pouring into the Indian economy, or whichever country you're looking at, and for long term. It is not a short term money which is transacted. It is a long term money investment in a promising economy. So there has to be certain fundamentals which are correct for the economy. Otherwise, FDIs will not be on the higher side. It will dip. So if FDI is increasing, that reflects the economy is showing promise. If FDI is declining, it reflects that the economy is in the weaker sense, weaker condition. Let's look at Indian economy and see how things have been. India is the only positive FDI destination beyond China, but China in the current year is getting into negative size. It will become a negative FDI destination in the current year. India is the only positive destination in 2021 for FDI. And it is completely contrast to what's happening in other countries. Mexico is not able to match up to the current trends. So India has been able to beat the trend. And yesterday, I was there in NCR for a government assignment where I'm on the advisory board of the railways for the infrastructure development and expansion and monetization of infra. So we were having a discussion, and on return, while I was coming back in the flight, it was announced that India has reached the very coveted title of 100 billion vaccine dosages, where the world was skeptical that India will take 7 to 8 years to vaccinate its whole population. We have been able to do this, not the whole population, but able to benchmark or reach the benchmark 100 billion doses, which is almost 1/6 of the total population, total doses administered across the world, which talks very strongly about how we are placed in infra, how we are placed in the logistics, how we are placed in the decision-making policy framework which the country is facing, which is very, very. Now look at the FDI inflow in compared to previous years. FDI inflow compared to previous years. In 2008, the FDI was 12.6. Inflow, and year-on-year growth was 2.6%. If you look at year-on-year basis, it is a consistent from 13. It is consistently increasing without much of decline as such. The only slight decline or reflection is there in 19. Now, this is also where you can see the capex cycle of a lot of listed companies. Any student who is interested in finance side should try and download the balance sheets of listed company and see whether they are doing capex cycle or not. A capex cycle reflects that the company and the management is very positive about the future of the company, and they are trying to do capital investment for long-term monetization. Every single sector which I have studied in the past year or so is doing capex cycle, and I'll talk about it in the second part. So FDI is an international investment happening in the economy. The data reflects there's a lot of promise, and money is chasing the future growth. FDI is always chase where the money lies. So money is attractive when money can be made. If the country is showing promise, that's why the money is coming towards India. Let's look at some thematics. Let's look at some startups, because you guys are the new generation and you have the interest of building startups. Look at the funding scenario of startups. This is a data September 2021, $2.9 billion in September were raised in the current year itself, which reflect 41 transactions of growth stage funding and almost 114 transactions of early stage funding, which for early stage. Early stage is where the investment happens less than 1 million. So 1 million or less than 5 million is what the early stage is, and later stage growth stage is where it is more than 5 million. 3 unicorns were declared in September itself. And the right side data, if you look at, this right side data will give you a perspective which all companies were successfully able to raise funds. Misho, Cars24, these are growth stage, late stage deals. Look at the size of the deals. It is 500,000, 100 million and upwards is what has been taken here as data. There's a lot more data beyond this. And early stage data is there from 10 million to 90 million, which is less than 100 million, which has been for Dukan, Fitter, Carbon. A lot of new companies are coming up. Now, this data, it itself reflects that the Indian new age ventures are able to attract international money as well. And the private equity players, the venture capital players, the angel investors also showing a lot of interest in the Indian companies. So look at the data, right side data, bottom data, which is all Series A or pre-Series A, means which is the formal institutional round is called Series A of funding. And that is where the promise lies for the new age venture itself. Companies which are already grown in size is on the top table, which reflect that more than 100 million has been raised in all these companies, which is Series C to Series F. These are different series on the basis of which the money is raised. The startup scenario is also, funding scenario started very promising in the past 1.5 years, and a lot of money has been poured internationally in the Indian entities. Let's look at some more data on the startups. So Indian startup raised record 11 billion in 3 months. 11 billion. Just to give you a perspective, 1 billion is 7,500 crores. 11 billion is more than 80,000 crores coming only in startups in India. Look at the right side table. This table talks about Indian unicorns. And in the very year 2021, we have seen more than 30 unicorns coming out of India, which is unprecedented, but at the same time shows that India is fast adopting technology, and the ventures which are technology enabled are getting a lot of interest from the capital side. Vedantu, which is edutech, Zeta, which is again tech enabled, digital insurance company, tech-enabled insurance company, pharmacy, tech-enabled, e-pharmacy, Bloom, automobiles, tech-enabled. All these are tech-enabled ventures, and they all become unicorns. Unicorn means they have a valuation of more than $1 billion. It's 7,500 crores in index. The year has been phenomenal for startups, and it is not slowing down anywhere. The startup story is unfolding. Now let's look at what is happening on the MSME side. What are the themes which are driving MSME growth and how it is shaping up? The very first theme is China plus one, or it can be read as China plus India policy. What is China plus India policy? Let me give you some perspective. In the global supply chain of goods and services, India has always been shaping up, and the pecking order changing in the international scenario. China is no longer a very trusted nation for the global supply. So companies and China manufacture products, manufacture core ingredients, procure core ingredients. All that goes into the supply chain of goods is what they want to have an alternate destination for. India is poised to grow, poised to benefit from it. And if you look at chemicals, if you look at textiles, if you look at steel, if you look at metals, if you look at specialty chemicals, if you look at drugs, if you look at drugs, when I say basically composition-based drugs, pharmaceuticals, if you look at medical equipment, if you look at cement, if you look at every core commodity, core sectors, or sectors which are like paper, for that matter, automobile manufacturing, automobile ancillaries. If you look at any of these core manufacturing sectors, you will see very interesting data points. All these sectors are witnessing capex cycle, and in fact, infrastructure and real estate is also facing capex cycle. It's a very unique situation in the capital market terms, because capex cycle for almost 12 to 14 different sectors. Usually capex cycles vary from 2 to 3 sectors at one point in time to 4 to 5 sectors overall. But this reflects that India is gearing as growth is also the global mindset of creating alternative to China's manufacturing dominance. So chemicals, specialty fertilizer, paper, you see agri commodities, tea, coffee, sugar, metal and minerals, you look at it, then also the same information is there. IT and ITS has always been a dominant factor for India. Infrastructure, railway, road, airports, smart cities, railway healthcare, food processing. They are getting global supply chain orders. So the alignment of supply chain is getting in favor of India, and that is where we can capitalize upon. So every MSME which is looking to grow in these sectors will find a lot of traction, lot of opportunities, and we have more than 2,000 plus clients across India, and we operate out of almost 11 locations right now, expand almost in the country. And everywhere we see every entrepreneur is excited right now to grow. They have shed the innovations, they have shed their and they're looking to growth, they're looking to new opportunities, they're also seeing a very different trend. I'll make certain facts there as well. I'll build certain facts there. So betting on Make in India, it's something which is a thematic change because India has been predominantly a service-based and agrarian economy. The second leg of the economy at the macro level, which is manufacturing, was not a dominant factor for Indian economy. But if you look at total inflows and FDI equity in the past years, it is reflecting a growing trend. The total investment of 55.6 has grown 73.4. The FDI of 40 is rising to almost 50, which says that there's a lot of interest for manufacturing. I'll give you some perspective here as well. Since we deal with all variety and sectors in terms of client base, earlier in the past decade, there's a lot of interest of having an exposure towards real estate, having land, flats, commercial real estate. A lot of those people who have seen that the money was stuck because of pandemic have realized that they need to put in money for cash flow generating assets. Many of these clients which we cater are shifting towards manufacturing activities. And to give you a perspective in UP itself, in Sandila, there's a manufacturing facility coming for Berzer, Haldiram. ITC is also planning a plant near now. There are two paint companies other than Berzer who are trying to put up a plant here. And there are four processing entities which are coming up very much in the vicinity of Lucknow region. So this is happening in very near vicinity for you. There are certain more investments which are happening, which is into defense and manufacturing as an ancillary to automobiles. We have a few clients which are global tie-ups and global joint ventures in UP itself, which are putting up their shops, putting up their manufacturing setups. In Gorakhpur, there's a textile setup coming in and a pharmaceutical setup coming in another place. Oraya, there's a plastic park which is coming in. There are almost 5 companies who are starting their operations in Oraya for plastic and for plastic parts. So the very economy of UP will also see a shift or rather growth of manufacturing activities beyond agrarian activities. So in UP has been an agrarian belt and also a consumer market. But manufacturing activities were not dominant. It was more dominant towards the west and south of the country. But in UP, with the policies which are being driven by the state government, and also the support given by the central government, which has already happened in the electronics manufacturing in the NCR region, which is Greater Noida, and parts. Look at certain data points for various sectors. So services is grown 15%. It is contributing 15-16%. When computer hardware 15%. So in FDI, if you look at the total pie of FDI and you break up that FDI into various sectors, and you want to look at what percentage has been attracted by which sector, then the right data is in front of you. So services attracted 16%, computer hardware 15%, trading, telecom, tourism, and hotels, automobiles. All these sectors have attracted sufficient FDI as sector. So it is not but it's in technology enabled. It is almost in every sector that the money is pouring because they are becoming commodity aspects. Commodities are basically goods which goes into the manufacturing of finished products. So if you look at basic commodities which are extracted as natural resources, so petroleum, gems and jewelry, this is basically what is the contribution of commodity in the economy overall. So machine appliances, organic chemicals, auto vehicles, pharmaceutical products, electrical machinery and equipment, iron steel, apparels, articles of iron steel, plastic, cereals. So if you look at the export data, total commodity export from India is 313 billion. And the breakup of various sectors is reflected in the data, which is all segmented. Now, this is also a reflection of growing size. Every pie is growing in every segment. Why? Because if you become a sourcing ground for the global consumption, then India is poised to grow tremendously. And the very dream of 5 trillion economy on an absolute level is difficult to achieve. It's very much possible. Now, looking at how manufacturing is shaping in, so these are the rankings of most attractive manufacturing destinations. India has always been a manufacturing hub, and China has always been a manufacturing hub, and China has always attracted a lot of money investment for capacity building. But India has tremendous, the growth of India in the past few years to become an alternative for manufacturing reflects in the #2 rank that India is enjoying today. And among the 47 countries, India is #2. What is the cost of manufacturing is favoring India, the conditions and the policy and of other countries. So, given these contexts, it is benefiting to shape India in that really became a service-based dominant economy. So there were some connectivity issues. Let me reshare. I hope you are able to view my slide right now. Can anybody confirm?